Hey, good afternoon, everyone. How's everyone doing today? Welcome to our.
Wonderful. Thanks.
Well, I'm glad that's part of my housekeeping item. I was going to tell you, you all have access to your microphones. So if you have any questions throughout the presentation, you could use the chat function or you could use your microphone to ask a question. Ask anytime during the presentation. There'll also be Q&A available at the end. Okay, so welcome to our Medicare seminar. I'm John Gordon. I am Director of Business Development here at National Police Federal Credit Union. We have our two presenters. So we have Russ Caforio, and Russ, I'm going to read your bio. I didn't memorize it. But Russ is an independent insurance broker with decades of experience. He's a senior on Medicare and has been marketing Medicare-related products as part of the retirement planning process for many years. Whether it's Medicare supplements, prescription drug plans, or Medicare Advantage plans, Russ can identify the best plan options to meet your needs. So thank you, Russ. And Sean Gordon, my brother from another mother. Sean, for the last 15 years, has had the privilege of helping people understand their Medicare options and find plans that fit their needs and budget. Whether you're new to Medicare or looking to review your current coverage, he's here to make the process clear, simple, and stress-free. He'd really love to work together to ensure you have the right plan for your health and peace of mind. So welcome, Sean, as well. I'm going to hand it off to Sean. Again, if you have any questions, you have access to your microphones, and I'll be monitoring the chat as well.
Thank you very much, John. Appreciate that. And of course, today we'll be going through the basics of understanding Medicare. And you can go ahead and advance, John.
Oh, I'm sorry.
That's all right. And just to let you know, this is our team. There are a team of 6 individuals that cover the National Police Federal Credit Union here in Chicago. We are actually have an exclusive relationship with the credit union to help them with various items. So you'll see from the slide, not only do we handle Medicare, but we do handle retirement planning, whether it's saving for income for retirement, deferred comp, rollovers, IRA, Roth, traditional pension under financial protection and planning. You can see the items that we do there. And then in addition to that, estate planning, whether it's creating and preserving assets for the next generation strategies to minimize estate taxes. And then, of course, at the very right-hand side of the screen, you'll see the health insurance alternative, under 65 options. And then for those that are over the age of 65, we do cover Medicare options as well. So we are here basically for all your needs. Nice thing about it, what we do is complimentary to you. So there is never a charge for sitting down to meet with any one of us. We meet exclusively at the credit union branches, the 4 branches here in Chicago. If you are out of the area, we'll be more than happy to do a Zoom call with you or a phone call, whichever is convenient for you. And if for some reason you are in the area and, for instance, one of the credit union branches doesn't work for you just because of the office hours that they do have, we do have availability at our office in Oak Brook as well. And of course, on today's agenda, what we're going to cover is what is Medicare, simple, straightforward. Then the different parts of Medicare, A, B, C, and D, enrollment eligibility, the costs that are associated, whether it be premiums, deductibles, co-payments, etc. We'll do a comparison as well, whether it makes sense to go to Medicare if there is still spousal group health benefits available, supplemental insurance, as well as we will cover the different types of Medicare options that are available to you, whether it be a Medicare supplement or a Medicare Advantage plan. And then, of course, towards the end, we'll cover important costs to address. We should go probably about 30, maybe 40 minutes. Obviously, this is a very open, very loose forum. So if you do have questions at any time, please feel free to stop us. What is Medicare? Medicare is a federal program for people age 65 or older. Some people are younger people with disabilities. So, for instance, if you were considered disabled prior to the age of 65, and let's say you qualify for SSI, in that particular case, you would also be eligible for Medicare. And then, of course, people with end-stage renal disease. Why is it important? Medicare ensures access to affordable health care in retirement, as it says on the slides.
Now we'll review the 4 parts of Medicare. Medicare Part A is what you get when you normally turn 65. That is a part that covers the hospital coverage, and you do not pay for that coverage. So whether you are still working beyond 65 or not, you still usually take Part A when you turn 65. Part B is they charge you for it, and we just found out recently they charge for 2026 will be $202.90 per month for Part B. You do not need that turned on until you actually are coming off any type of a group plan or don't have other coverage available. So, and Part B covers the medical, the doctors, and the that part of it. That has a deductible that you pay one time a year. I think it's $285 for next year. Is that right, Sean?
283.
$283, sorry.
Mhm.
$283, and that's a one-time charge, and then the rest of it's covered. The copay is 20% on the rest of that. But if you take the Medicare supplement plan, which is over the far right in the gray box, it includes plans A to N, which are different variations of the Medicare supplement. But the best plan you can get is Plan G. If you, unless you turn 65 before January 1 of 2020, then you can have Plan F. But the only difference is the Part B deductible coverage. Plan F covers it, Plan G doesn't. So with Plan G, you'd have a one-time deductible that you would have to pay. And then the supplement, Medicare supplement, picks up the deductible on Part A and the co-payment on Part B, which is 20%. If you have a Medicare supplement, then you need the Part D prescription drug coverage, a standalone prescription drug plan. And to find that out, we usually put your drugs through what we call a drug finder. And it tells with your zip code and the drugstore you use, it will tell you the best plan available on the market and based on your zip code. If you don't take that combination, you do get the Medicare Advantage. And with the Medicare Advantage plan, the government says to an insurance company, you take care of all of this person's medical needs. And so you have one plan, it's called Medicare Advantage, that covers Part A, B, C, and D, includes the drug plan. We'll go into further detail of that as we go on. Who's eligible? As was just mentioned before, if you're 65 or older, have a disability under 65, or the end-stage renal disease. When to enroll? Your initial enrollment period begins 3 months before turning 65, the month of your birthday, and then 3 months after. So you have a 7-month window to apply. And then there's special enrollment periods depending on when you're retiring after age 65, or if you're losing employer-sponsored insurance after you turn 65. Then there's a general enrollment period, which is January 1 to March 31 each year if you missed your initial enrollment period. Okay, here we go into a little more detail. Part A covers the hospital stays, skilled nursing facilities, hospice care, and some home health care. Generally, there's no premium for most people if you and your spouse paid Medicare taxes at least 10 years. For some people that may have worked in in employment that was not covered by Social Security or Medicare, and you didn't pay taxes in, you need 40 quarters of credit. And if either spouse has 40 quarters of credit, then the other one is covered as well. Part B covers your outpatient care, which is your doctor services, preventive services, and some home health services. It does require a monthly premium, and for 2026, as we just mentioned, it's $202.90. It was estimated to be $206.20, but they finally gave the final numbers at $202.90. Just remember on Part A and B, where it says home health care services, it does not cover long-term care. It's very limited benefits for any kind of long-term care under Medicare itself. And then C is the Medicare Advantage. That's the alternative to the original Medicare, as I mentioned before. Instead of having Medicare and a Medicare supplement, the Medicare Advantage plan covers all aspects of it. And with the Medicare Advantage plan, you are dealing with a private insurance company, and it, in many cases, includes all the benefits of A, well, it does include all the benefits of A and B, but it often has additional services such as vision, dental, hearing, and wellness programs. These optional benefit programs are limited. They're not like a standalone vision, dental, or hearing or wellness program. They are limited and usually have only in-network coverages. So just review what your needs are based on what your needs for those type of services. Decide whether that makes sense to use those benefits or have a standalone plan otherwise. Okay. Part B, prescription drug. It helps cover the cost of prescription drugs. Many plans have a deductible for, there's 5 or 6 different levels. The generic brands are usually with zero deductible or zero copay or very low copay. When you get into the brand and the specialty drugs, there can be copays that are much higher. Starting January 1 of 2025, the cap went from $8,000 a year to $2,000 a year on covered Part D drugs. And then when I say covered Part D drugs, there are some drugs that may not be on the formulary of insurance companies. That's why we put it through a drug finder to find out if all your drugs are covered and which plan would cover them the best. And then once you get through your 2,000, then they keep track of that for you. And once you get through to the $2,000 limit, then then you go into the catastrophic coverage, and you won't have out-of-pocket coverage or costs for that because you'll be covered for Part D for the rest of the year.
And just one of the important things in regards to Part D for those individuals that may be looking at a standalone Part D or currently have one of the things we do encourage people to do is review that each year. As Russ said, we kind of put it through a formulary finder. What worked for you in 2025 in terms of being the lowest cost provider may not necessarily be the same lowest cost provider for you in 2026 in regards to a standalone Part D prescription drug plan. Before I get into the next slide, I know are there any questions out there from what we've covered so far? Oh, okay. So as far as the cost of Medicare, you have Part A cost. Once again, based upon your working years, most people don't pay a premium for Part A cost, which is the hospital cost. Hospital stay deductible in 2026 is $1,716 per benefit period in 2026. Co-insurance applies to certain durations in a hospital or skilled nursing. One of the misconceptions that a lot of people have is that, hey, if I need long-term care, I've got Medicare out here, it'll cover for me. No, that is not correct. Medicare will cover you for 100 days in a skilled nursing facility. After that period, you are essentially on your own and coming out of pocket for whatever those costs may be. We will get into those costs so just so you have a clearer idea later in the presentation. Standard premiums, like I said, or Russ said, the estimate was 206, came in at 202.90 for most people. Obviously, if your income is higher, there is an increase that you would pay for your Part B premium. And just to let you know, if you are receiving Social Security, the government will do you the favor of deducting that from your Social Security check automatically each month, so you don't have to worry about that. They're so kind. The annual deductible was estimated at $288. As Russ mentioned, it came in at $283 for 2026. And then what Part B does, especially if you have what's known as a Medicare supplement, it picks up the 20% cost that exists out there after Medicare pays their 80% of whatever's hospitalization or doctor bills that you might have out there. Okay, retiree benefits versus Medicare. Retiree benefits from a spouse, young or older. Some of you may already have a group health benefit from your spouse, including dental, vision, and prescription drug coverage. You'll see the asterisk there. It says it might be more cost effective to go on to Medicare. Why is this so? Well, essentially, the employer-employee relationship is usually fine in terms of healthcare costs, in terms of what that person pays monthly. However, for that individual, let's say the spouse that is also on that group plan, well, the group knows that you have an option if you're eligible for Medicare to go on to Medicare. So what we've typically seen is that they increase the premiums for that second person to stay on the group plan, almost kind of forcing your hand to go on to Medicare. And in many cases, Medicare is usually a lesser expensive option than staying on the group plan. Not saying all the time, but in many cases. How Medicare coordinates, Medicare typically becomes your primary insurance at age 65. Retiree benefits usually act as a secondary insurance, filling gaps that within Medicare.
Sean, just to interrupt just a second
Sure.
here. If you're with an employer with 20 or more employees, then the group plan is primary. If it's less than 20 employees, Medicare is primary if you happen to have Medicare and a group plan together.
Okay. And then under retiree health benefits versus Medicare, what is a Medicare supplement / Medigap? Depending on what part of the country that you're in, sometimes it's referred to as a Medicare supplement. Sometimes it's referred to as a Medigap policy. They are interchangeable and exactly the same thing. What to consider as far as Medicare supplement: if your retiree health benefits don't cover certain Medicare out-of-pocket costs, you might want to consider a Medicare supplement or Medigap policy in this particular case. Medicare supplement, Medigap policy are standardized and regulated by the federal and state laws. This is something that's confusing to a lot of people, so I'll try to clear it up. So as Russ mentioned, and you kind of see on the slide, Plan G right now in this country is essentially the Cadillac of coverage as it stands for new enrollees into Medicare. Plan G, whether it's offered by, let's say, Blue Cross Blue Shield, United Healthcare, Aetna, Humana, doesn't matter the company. The coverage is exactly the same with every single company. Once again, it's standardized and regulated by the federal government. The only real difference that you see is the monthly premium that you pay. So each company's going to premium for that Plan G is going to be a little different from the other company. Some are much lower, some are much higher. Once again, you're getting the same exact coverage regardless. So it kind of pays to shop around to make sure you're getting the biggest bang for your buck, so to speak. Okay, so here goes the all the plans that are available through Medicare. Once again, or if you've ever received or you've seen the Medicare and You booklet that the government gives out each year, this is within the booklet. Plans A through N, you can see we highlighted Plan G. Everything is pretty much covered under there. The only thing that doesn't have 100%, if you go over to the left-hand side, is the Part B deductible. Once again, that Part B deductible is going to be $283 in 2026. The way the deductible works, just to kind of give you a quick example, let's say you go in for a routine doctor's visit. This is at the beginning of the year. We know that Medicare is going to cover 80% of that doctor's visit. So and let's say the doctor bills $100 for that visit. Well, Medicare is going to pick up $80 of that cost for the doctor's visit. Once it's paid, that 80% is paid by Medicare, they would send that over to whichever company you have your supplement with. Once again, Humana, Blue Cross Blue Shield, United Healthcare, Aetna, etc. Aetna's going to see and say, oh, customer X owes $20 on their bill. We see that they haven't satisfied their deductible. We're going to send this bill to them to satisfy that $20 deductible. So your Part B deductible would go from $283 down to $263. Quickest way to run through it, and obviously you probably don't want to do this, but if it happens, it happens. Emergency, let's say you rack up a $20,000 bill, you're going to have to satisfy that entire $283 deductible, and then your Medicare plan will step in and cover you for everything else.
And that's a one time a year.
Yes.
Okay, now,
so go ahead, Russ. I'm sorry.
Yeah, okay. Now just a little bit more of a side-by-side comparison between the Medicare Advantage and the Medigap or Medicare Supplement plans. The Medicare Advantage, as we already mentioned, combines A, B, and D, and that's the parts that come from Medicare and includes your prescription drug card. Whereas the Medigap plan or Medicare Supplement plan, it only supplements the original Medicare. Both are offered by private insurers, whether it's a Medicare Advantage or the Medicare Supplement. And as we mentioned before, the Medicare Advantage plan may include extra benefits like dental and vision, and some are hearing as well. The Medicare Supplement helps cover the Medicare gaps, the co-insurance and co-pays, but does not offer additional benefits, although there are some carriers now that do offer a plus, like a G plus or what, and some of those do have some additional benefits, so depends on carrier. And then the Medicare Advantage plans, they typically have a lower premium and higher out-of-pocket cost. They work much like a group insurance plan where they have deductibles and co-pays like you're used to with any kind of group coverage, and they have a max amount of pocket. The Medicare Advantage plans, you have deductibles to go to the or co-pays to go to the doctors and co-pays for other services, and you do have a max out of pocket just like you would have under your group plan. With the Medicare Supplement plans, they're higher premium, but they cover most out-of-pocket expenses other than that one-time annual $283 for 2026 deductible.
And just to give you an idea for those that are new, in terms of a higher premium. For instance, at Plan G for a 65-year-old here in the Chicago area, you're probably looking at maybe $115, $120 a month.
Okay, so the real choice is it Medicare Advantage or Medigap better for you? As we mentioned, the Medicare Advantage plans may offer some additional benefits, but the Medigap or Medicare Supplement plan does offer more robust benefits, especially if you have frequent medical needs. If you are going to do or you have conditions that require a lot of medical care, you may be better off with a Medicare Supplement plan. In addition, if you're a snowbird or go to a different area of the country for 3 to 6 months of the year, since Medicare Advantage plans are territorial, you may be better off with a Medicare Supplement plan if you do a lot of traveling or don't stay in your home area for all year. Prescription drug plans, you have to have credible coverage, which means you either have to have it up through a group plan or you have to have a standalone or as part of a Medicare Advantage plan. Otherwise, you will be subject to a penalty.
And just to piggyback before we advance to the next slide, one of the things that Russ mentions as far as being a snowbird, can you have a Medicare Advantage plan? Absolutely. Essentially, the way that would work is, hey, I'm having an emergency right now. I'm out of town. Obviously, your Medicare Advantage plan would cover you for that, but the goal is to essentially get you back into your original network as far as future services are needed.
Okay, so what are the action steps that need to be taken? Enroll in Medicare during the appropriate periods to avoid penalties. As I mentioned before, there's a 7-month window, 7-month window in which you have to enroll the 3 months prior to the month you turn 65, the month of, and 3 months later. And then you have to decide between original Medicare plus a Medigap or Medicare Supplement policy or a Medicare Advantage. And a lot of times, as we mentioned, that's based on your health needs, and we can help walk you through that and decide which one might work better for you. Considering enrolling in a Part D plan if necessary, and why that says if necessary is because if you do have credible coverage still through a group plan, you don't need to enroll in a Part D plan for your prescriptions. But as soon as you don't have credible coverage, there's a monthly penalty that starts to add up if you don't have coverage, credible coverage. And reach out to us for any further questions. And we mentioned already, are you a snowbirds? And then the resources, there's a Medicare.gov site for official information on Medicare plans. Your local Social Security office can help with enrollment and understanding of benefits. And then there's state health insurance assistant programs with free counseling as well. So if you can't find somebody like Sean or myself to help you, then there are some other sources that can help you through the process.
And one thing I'll mention as well on this slide, with the Social Security office, especially if you're going on to Medicare for the first time, make sure you go there at least, I would say 30 to 60 days in advance if you're signing up for Part B. There seems to be a drag in terms of them registering or getting people signed up for Part B. I'm not saying that's all the time, but right now, that's kind of what we're seeing. So if you're looking to enroll into Medicare for the first time, I would definitely encourage you to stop by your Social Security office, or you can go online and register for your Part B enrollment into Medicare.
Well, you can set up a Medicare account online, as Sean said, set up an account, turn on Part A when you turn 65, and then turn on Part B when you need it if you're not going to do it at the same time. But as Sean said, right now it's very, very slow in turning on Part B, even if you've already got it set. So make sure you give plenty of time, because you cannot enroll in a Medicare Supplement or Medicare Advantage plan without a Part B effective date.
Okay, common pitfalls to address. Part D penalty, long-term care, kind of touched on earlier, and IRMA, which is an acronym. We'll go through all of these in the next few slides. Okay, what is Part D penalty? A permanent fee added to your prescription drug coverage over your lifetime. What does this mean and how does it work? Essentially, kind of give you an example, it's almost a stopgap measure by the government to make sure that you do sign up for a Part D plan. And you might say, hey, Sean, I take no prescriptions right now. Why would I sign up for a Part D plan and possibly have an additional fee that I have no use for? Well, case in point, very early into my career, had a gentleman had the same argument. He was completely healthy, goes in to see his doctor once a year for an annual checkup. Halfway through the year, his first year on Medicare, has a heart attack. He has no Part D plan. He's now on the hook for 100% of the cost of the drugs that he needs to obviously keep him healthy. In regards to that Part D penalty, if for some reason you decide not to take it, there is a 1% of the national average for all the plans that are out there fee that's tagged on for each month that you don't take it. That fee stays with you for the rest of your life. I've ran into individuals where they're 75, 80 years old. They've never had a Part D prescription drug plan. In their case, sometimes they had a $20, $30, $40, $50 penalty that is tagged on to their monthly fee of their prescription drug plan, once again, for the rest of their life. Okay, why is planning for long-term care important to me? Pension versus Medicaid. This is especially true with the retirees that we work for mainly, which a lot of our retirees are retired officers. And one of the curse, or I'd say blessing first, and then the curse is with the pension. Obviously, the pension provides you a guaranteed income stream monthly for the rest of your life. However, because that income stream is so high, if Medicaid was to look at it, they would say that you don't qualify for anything. This is how many individuals qualify for state-funded long-term care through Medicaid. But once again, with your pension, you will never be able to qualify for Medicaid just because of the dollar amount. Okay, for those, a little comic relief, if you will. 3 stages of retirement, and it kind of rings true for basically most of my clients that I deal with. When we initially retire, we're in the number 1 stage, the go-go. We're going out, we're traveling, we're seeing the grandkids, we're doing this, we're doing that, we're having a great time. Stage 2 is the slow go. Hey, not feeling as great as I used to, but I'm still getting around. 3 is the no go. Yeah, I'm not leaving the house. I'm watching Wheel of Fortune tonight, and that's basically my day. So, kind of 3 stages of retirement to keep in mind. And just to kind of piggyback or circle back around to what long-term care costs run currently and what they're anticipated to run into the future, just so you know, and always knock on wood, hopefully you never need it, but that's why you kind of prepare for it just in case to make sure you have a plan. Some of you might have witnessed this firsthand with loved ones or even with family members where they either had to go to a facility or somebody in the family tried to care for them during their time of need. So in the Chicagoland area, and this is probably, I'd probably say close to the national average as well. But if you were to have somebody come into the house on a monthly basis, you're looking at $6,673. Community and assisted living, adult day healthcare. Essentially, just like it says, during the hours of 8 to 5, we're going to have somebody look at mom and dad and make sure they're okay. We take them to a facility for that. That cost is about $2,700. Semi-private room, if you were to go to a nursing home, right now in Chicago, you're looking about $10,200 basically. You can see below there the anticipated cost in 2055 of whether you're having in-home care at $16,683, whether you're going to that community or assisted living of almost 7,000, and then of course, if you are in a nursing home, 25,476. And one of the areas that run into with the nursing home, especially with the baby boomers, because there are so many people in nursing homes already, there's technically not enough rooms. So a lot of people have to be put on a waiting list before they can actually receive a room in a nursing home facility. Okay, so what is IRMA? As I mentioned before, this is an acronym, stands for Income Related Monthly Adjustment Amount. It's a fee applied to your Medicare premiums that can kick in if your modified adjustment income is above a certain amount. And as we mentioned before, the premium in 2026 is $202.90. And we'll see how this plays out going forward in the next slide. So let's say, for instance, you are filing joint with your spouse. As long as your income was below $210,000 in 2025, you pay $185 for Part B. As I mentioned, that figure is going to 202.90 in 2026. Part D doesn't really affect their Part D premiums. Obviously, as you can see, as you go down the chart, and if income increases, then you pay a higher amount for Part B. And I'll show you, or kind of give you an example, case in point, met with an individual. She's on Medicare. Her father had passed. She inherited quite a bit of money from her father. She has to liquidate those assets in terms of receiving it as income over a 10-year period. What it did for her is it bumped her up from that $185 amount in 2025 up to $591 that she was paying for her Medicare Part B premium on a monthly basis. In addition to that, if you look over to the Part D column, you'll see that whatever her premium was for Part D, she had an additional amount of $78.60 added to that.
And these go up every year.
So just something to keep in mind. Why would this be a factor or affect me personally? Well, one of the reasons is this slide right here. What are RMDs and why should I be concerned? RMDs are, once again, an acronym, required minimum distribution. Some of you may have heard of this, some of you may not have. They are a specific amount of money you have to withdraw from a tax deferred account. So for instance, here in Chicago, a lot of our retired officers contributed to nationwide deferred comp while they were working. They essentially built up what's known as a tax deferred account. So what happens? Well, once again, the government does you a favor. If you were born after 1960, and I'll go through kind of both numbers. If you're born after 1960, at the age of 75, you have to start taking a required minimum distribution from that deferred comp account. If you were born prior to 1960, 73 is the age that you have to take a required minimum distribution. Why does this affect you? Well, just like we showed you on the previous slide, you're receiving a pension. Now you've got this retired minimum distribution income piled on top. What that can do is actually increase the amount, obviously, of income you receive annually, and that can cause an increase in your Part B premium as well as your Part D premium that you would pay as well. And just to kind of give you a real world example, and this is something that we can do for anybody, essentially you'll see here what the RMD implications, and I'm going to take a little audience participation on this just to see, what you think this might be. So what we're assuming here, the individual is 55 years old. They live to the age of 90. They currently, at the age of 55, have $500,000 in their deferred comp. Let's say that money is growing at 7% per year. We assumed a high-end marginal tax bracket of 24% for this money. And then beneath it, we're going to show you a conversion as well, and kind of get into that on the next slide. But before we do, let's hear from the audience. How much do you think you'll pay on taxes between the ages of 55 and 90 on $500,000 today at the age of 55? Anybody can respond. There's no wrong answers.
Yeah, so you can unmute yourself to answer, or you could type in the chat.
32%.
Oh, I'm sorry, dollar amount. Give me an actual dollar figure.
Oh, dollar figure. $500,000.
How much was that?
I said 32%, close to maybe 180,000.
Okay. Good answer. Anybody else? Okay, so we'll go with Arnold's answer for right now. Let's go ahead and flip to the next slide, John. So here it is. For that individual that lives to the age of 90, once again, starting with $500,000 in, let's say, a deferred comp account or any type of qualified account, when they start taking the RMDs, they are going to pay $504,193 just on taxes on the RMDs that you have to take out of the account that the government has mandated that you take out of the account. But what typically happens with this money, and we see it with a lot of cases, is that people take the money, and because of the pension, they say, I really don't need this money. I'm going to throw this into a brokerage account. I'm going to throw this into a share certificate. I'm going to throw it into a CD. I'm going to throw it into something else. Well, guess what that generates for you? It generates a 1099 saying your money earned this much this year. Now you owe taxes on the money that or the interest or income that money has generated. In this case, $211,000, $527. So that's kind of a rough shot. Here goes the kicker. Let's say you and the spouse, or just you pass, and it goes to the next generation, meaning there's children or whoever it goes to. Well, essentially, they have 10 years to liquidate that account. If this applies to children, more than likely, mom and dad were in their 70s or 80s or whatever age when they pass. The kid now, or child, is obviously grown, 40s, 50s, maybe early 60s. They've got 10 years to liquidate that account. What have you done to them? Based upon, they're probably in their highest earning years at this particular period. So you've thrown that extra income on top of them. They have 10 years to get all that money out of that deferred comp account in this example, or any type of qualified account. So they're going to pay essentially overall, the tax bill would be $1.2 million, almost 1.3 on that initial $500,000 at the age of 55. Now, what we've shown many people is to, hey, how about I take this from tax deferred to tax free? You do have that option available to you, and we can show you how to accomplish that as well. Obviously, would taxes be due on that conversion? Absolutely. Do you do it all in 1 year? Wouldn't recommend that at all. Typically, we spread it out over a 4, 5, 6, maybe even a 10-year period. However, the taxes that you would pay on that is 120,000 versus the 1.2 million. So even when upon passing, let's say that money goes to the next generation, they receive that money tax free by doing a conversion on your existing qualified money. And this is just kind of a quick chart, just kind of shows you, for instance, what would be the required minimum distribution. So if you see in year 9, age of 73, that individual is going to have to pull out $45,365. After taxes are taken out, they're actually having a little over 34.5 put into their checking or banking or whatever account it's going to. And as you see, as you go down the chart, that number kind of gets larger. Reason being is your account is still growing tax deferred. So the bigger number there means that you have to take out more going forward. Okay, so kind of went through quite a few different things. This sheet up here is typically a sheet when we do our in-house seminars here at the main branch on Washington. We hand this out for informational purposes. But if you see one of the boxes on there, you say, ooh, I'd like to know more about this, feel free to write it down. We will have contact numbers and information at the end of the presentation. We'd be more than happy to sit down with you and tackle whatever questions you might have above and beyond Medicare. Yes, so that is available to you. And like I said, with the previous slide where I showed you as far as the tax breakout for those qualified accounts, actually one more back, John. Yep, so we can actually run this report for you as well. So if it's something that you're interested in, and maybe your existing person that you're working with isn't talking to you about, be more than happy to talk to you about that as well. Okay, as far as closing thoughts, Medicare is obviously essential to you as you transition into retirement. Coordination between your Medicare and your retirement benefits can maximize your coverage and minimize your out-of-pocket costs. Take time to review carefully the decisions that you do make. As Russ and I are here and available for you. If you're not sure, you do have questions, do not hesitate to reach out to us. Like I said, this is a service that we offer complimentary to to anybody that wants it here at the National Police Federal Credit Union. And you do not have to be a member of the National Police Federal Credit Union. So if you have a parent that might be on Medicare and you're like, well, I'm not really sure what they're doing, want to have somebody take a look at it, we can do that for you as well.
I have a question.
Sure, go ahead.
Okay, I'm not on Medicare yet, but my husband is,
Mm-hmm.
and he's been on it for a few years. Now, on open enrollment season that comes up every year,
Mm-hmm.
do we just let that ride? Like, we haven't done it, we haven't touched it, and I'm assuming he still has whatever we signed up for. Is that correct?
Okay. Yeah, I would, you can let it roll, absolutely. I think one of the things that Russ kind of touched on earlier, especially if it's a Medicare supplement with a Part D plan, two things there to be to look at. One, with Medicare supplements, as you age from year to year, you are going to get a slight premium increase, and that's going to apply across the board to everybody out there. So as you're 65, you're going to have one rate. As you turn 66, everybody else that's in that 66 group is going to have a new rate as well. What I kind of encourage people to do, especially if you're healthy, you can shop that rate around, because once again, keep in mind the plans are standardized. So it doesn't matter which company you're with, you're getting
You
the
get the
same
same
exact
plan.
coverage. You're keeping
Oh,
your
okay.
same doctors, your same specialists. So I encourage people to definitely shop it around. Secondly, with the Part D coverage, if your husband has a Medicare supplement, I would encourage him to shop that as well, because what worked in 2025 as the best, most cost-effective plan might not be the most cost-effective plan for him in 2026, because these companies do change their formularies as far as the prescriptions on there. So I would definitely encourage to take a look at it. Some people are comfortable. They're like, hey, I'll just take the premium increases. I'll just take the Part D increases and just ride with it. But at the end of the day, I like keeping money in my pocket as opposed to giving it away for free to other people. So the choice is always yours.
All right. So it's like any other insurance. They'll just keep re-enrolling us in the same thing, and then you got to spot check it every once in a while to get, a better rate.
Yeah,
Absolutely.
and one thing that happened this year, at least in the Chicagoland area, is some of the insurance companies stopped offering some of the plans that people were on, and they sent letters out saying that as of December 31st, you will no longer have coverage. You have to find another plan. So there's a lot of people scrambling when that happens, especially this year. So just keep an eye on your mail to make sure that you don't get one of those letters, and if you do, that you pay attention to it immediately.
I have a question.
Sure,
Yes.
go ahead.
Does anybody know if the FOP offers an, uh, the insurance after A and B to retirees?
Does who offer? I didn't understand.
The FOP. Does the FOP offer like Blue Cross Blue
FOP.
Shield supplement? Yeah, the fraternal order police.
Yes. Go ahead, Sean.
Do they
Yeah,
offer?
they do offer a plan that is available to you guys. You would have to reach out to them directly in regards to that. But there is a plan that is available to you guys.
Okay. All right. I think I'm gonna have to come talk to you guys.
Okay.
I go on Medicare in 6-7 months,
Okay.
and I don't know where I should be doing what when.
Sure.
And then my deferred comp is out of control, so I want to move it to an annuity.
Okay.
Yeah, but
Yeah.
I'm more concerned about the Medicare part.
Absolutely. Yep. And we'll definitely sit down with you. And obviously, each case is a case by case situation in terms of
Okay.
what plan is the best plan for the individual. And when we sit down and meet face to face, these are some of the questions that we uncover. And based upon that, we'll give you options in terms of what might be the best option for you going forward.
Right. Right. I need to keep my doctors. And I'm a cancer survivor, so that's one of the issues.
Absolutely.
As staying with my oncologist.
That's why we work backwards to find, if you're going to consider a Medicare Advantage plan, we always check the drugs and the doctors because they are network driven. If you're going to take Medicare supplement, you normally don't have to worry about the doctors because most doctors accept the Medicare assignment.
Okay. Well, I'll reach out to you guys.
Okay.
Hold up. Thank you.
All right. Thank you. Yeah, I think we have any. Yep. So if you do have questions, you obviously can see our information there. Feel free to reach out to us, whether it's email or via phone number. We will definitely reach back to you. And if it makes sense, we will definitely schedule a meeting to meet with you, like I said earlier, at one of the credit union branches that's convenient for you. If for some reason those hours don't work of the credit union branches, we do have the availability to meet at our office in Oak Brook as well.
Or if you're out of town, we can meet by Zoom or phone.
Yes. Any other questions?
Thank you.
All right. Well, I want to thank everybody for participating today and being a part of the group. Hopefully you learned something that you didn't know in the past. And even if stuff, like I said, is unclear, or you're still not 100%, reach out to us. We will walk you through at your pace to help you to understand the process.
Awesome. Thank you, everyone, for joining. Have a great Thanksgiving.
Bye.
All right.